Hello guys, it's Randall with Bear Raged. So this is the weekly Forex market breakdown. I was planning to get this out to you earlier today, but I had a little things pile up on me, so we're going to do this tonight. Just want to give you a bigger picture of the dollar index on the weekly. So on the weekly you have this bigger pattern. Obviously these two outer trend lines are not confirmed. I would just have them there as kind of an outline, but they're not confirmed. But this pattern here is fairly confirmed. I think it's actually really well confirmed. You have 1, 2, third touch. So this is an ascending channel. It did break down, but it didn't complete. So when we look, we zoom in here and we see this smaller ascending pattern, which is a very clear corrective movement that we're looking to see to break to the downside. To see this breakdown makes total sense. Now, we have a double top area here. We have a double top area here. It could move up to those areas. You know, we really don't know what could happen. But you'll notice that as we move up, we move down, we move up, we move down, we move up. You notice something. We just barely are breaking these highs before we moved to the downside. So if this continues, which appears to be a move down and a corrective movement up, this might just break a little bit above and then it might drop. Now obviously it could drop from here, that is a possibility. But looking at the pattern here, it is a possibility we move back up to that 99 area, or even, as I mentioned previously, that even 100. I just think that that is a huge possibility at some point here. So that's what we're looking at on the weekly. I think we need to keep that in mind. But this is a sell pattern, and it is not invalidated yet. So, you know, we could still move in here for a while before dropping, but it's still a sell pattern. So on the daily here, just a couple things to keep in mind. You can have that on as a double top area, and I would also put that as a double top area. So we could reject at one of those areas, and then we might get that sell earlier. So that's a possibility, and obviously there's this area as well, which is the top of that ascending pattern. So those are areas to look at for rejections if you're looking for rejection areas. So just keep in mind that if you're trading euro dollar, the big moves, it has a huge tendency to appear to be moving, then it will suddenly spike down, take out all, you know, the retail traders, and then it'll move in the direction you expected. So just keep that in mind. And I'm not saying don't enter trade. What I'm saying is, if you do get taken out, don't get put off. You know, get back in if the criteria is met and it's a really high quality trade. So this is a little clearer on the euro dollar, so we're going to look at that. But what I do want to show you is we do have an impulsive movement, but as soon as we break this high, we are retracing. So we move up, move down, we break the high and retracing. And so we're moving in an ascending fashion right now. Now we know that when this happens, it indicates weakness in the market. And doesn't mean that we can't move up. We could move up from here. We could move down, form what appears to be a flag, and then move off from there. That is possible. But we do want to be careful when we see these ascending type patterns out of impulses, because it does indicate weakness. And I am very careful about taking flags of this style. So something you should really know if you haven't been following us for long is the euro dollar loves to double top. It loves to double bottom. If we look at this here, it just breaks that double top and it moves down. If you're looking for confluence, we do have that overall arcing nature. It's more of this pattern, even though we did get that move up here. Now, you have to be careful. You don't want to take early ones like this that often, although this one would have worked in your favor. But they can often do that and just move up. So double tops, they work quite a bit. Now, something interesting here is this is double bottom. It's almost perfectly aligned with that, which was the previous low of a flag. What's interesting is that we might be almost mirroring this pattern, which could just simply mean that, or it could be a reversal. This is in the middle of the pattern. It's in the middle of what I would say nowhere. So it's not a high probability setup to take as a rejection. I would not take this as a rejection, even though that is a possibility. If this double bottom happened down here, then I would consider that a high probability. So if we get a rejection from there, you know, something like a Morningstar formation, that would be a high probability setup, and I would be interested in taking that as well. One thing we do want to keep in mind, though, is although there's impulse and corrections throughout this, overall, this is just a sideways corrective movement in many ways. It doesn't mean that there weren't trades. There were trades throughout this, and you can take advantage of it. But you have to keep in mind that overwhelmingly, this is a pattern where the market is building up, getting ready to make those big moves. It's building up the momentum. And so this often happens just before the big moves, and it often catches people on the wrong side of the market. So that's something we want to keep in mind. The impulse on the hourly is to the bottom. This is very possible, could be a flag. It's not a flag that I would be taking. If we look at this on the daily, we do want to keep in mind again that the euro dollar is a descending channel. It is looking as a move to the upside. This is the impulse. This is just a correction. Appears to be just a correction to move to the upside. That's why I'm seeing it. It looks to me more like a broadening wedge type formation. And I'm just going to look at it that way. So what I'd be looking at again is to see if this gets a rejection at the double bottom area. That would be definitely something I would be looking to take for there. And if it breaks down below that, then we're just going to want to look there for that as a double bottom. Now, if we break down below this impulsively and we get continuation, then we're going to say, you know what? We have something else that's developing, and this pattern is not going to play out immediately. But again, keep in mind that for euro dollar, it loves to catch you on the wrong side. So don't get put off, for instance, if we move down very correctively, hit this, and then suddenly spike down below, because there's a very high possibility that it is going to still move to the upside. I want to take a quick look at Aussie dollar. It's an interesting pair, and I do think that we are going to see some good movement on this. So we did get that impulse, very lovely impulse that started in July down. But then, like I mentioned, we get that descending corrective movement, and it's just slowing momentum. It's indicating that a change of direction is possible. And what happens is it moves into a large ascending pattern. You could call this a flag if you want. That's fine. And what I think is really possible is to see this move down. How far? I don't know. But move down just before that big move. And again, that would kind of correlate with the dollar, the US dollar index. So just quickly on the Aussie dollar here. Again, I'd be looking at that for a double bottom. It's very clear because this is also in the same area. And if you look here, this is just slightly above. Okay, so we might double bottom there. This was a significant point. These huge wicks are often retested when they are significant points. So those would be areas that I would look for the rejection. But the pattern would indicate that it wants to finish the pattern. So 1, 2, 3, impulse, correction, impulse, and then that move to the upside. So that's what would be the most probable for this pair. So when we break this down to the hourly, I think it's very important to see where we come from. And what we come from is an ascending pattern, which broke down into a mostly descending corrective pattern. There are impulses within this. These trend lines just give you an idea, so you can kind of see it a little bit more clearer. And again, we have an impulse. This is more a sideways pattern. Now these type that come from this corrective movement don't necessarily have to break to the up or the downside. They can go either way. So normally this type of pattern would break to the downside, but it doesn't come from a impulse that's really larger than the correction. So overall, this is just one large big correction. And if you look at this last piece, it's looking like it wants to break up early. Doesn't have to happen. but that is what I would be looking at. So if we do get that break to the upside, what I want to see is a clear impulse and then a flag, and I'm going to get in on that flag. So I'm not going to set an entry for a break because there's too many areas where it could just move up and then immediately reject. It's not a good, that'd be not a good situation. So for British pound dollar, we're looking at here on the daily. What we talked about previously as is forming a flag appears to be what is happening. There's a couple things I don't like about it. It formed two bottoms, and what we want to see is that move off from there. But instead we rejected just after we broke this high. It doesn't necessarily mean we're getting weakness and going to drop out, but it does indicate the strength might not be there yet. So it might just be a move down, and then we build up those buy orders to get that bigger move. But the longer we move like this, the less likely that you get those big moves like it is a flag. So that is something to keep in mind. We do have this broadening wedge we were looking at, and we're still seeing if that will play out. And if it does, we'll be looking at those areas for a confluence. So on the 4 hour, it might be a little bit clearer. Again, important, as I mentioned before, these type of patterns, these ascending, where you're just breaking the highs and you're losing momentum, it does indicate that it's going to slow down and stop. This can help you in managing trades. It can be a good way to, protect your profit. So we do get those. What we're looking at now is to see if we get another touch here, a third touch, and then the move off. That would be a good, if we get a clear rejection at that area, it'd be a good entry to take. I wouldn't say it would necessarily be the highest probability, but it would be a decent trade. And again, if we get anything like a morning star or we add confluence, then it would definitely be better. But I would be definitely interested in taking that position if it happens when I'm at the charts. On the hourly, we're actually at an area where if we're going to get a rejection and a move down again, it's probably going to happen relatively soon. Doesn't necessarily have to, but I just think that if we're going to reject tonight, it's probably going to be relatively soon. So we might see a little bit of a move up, and then maybe we get that break. But again, on Sunday, going into Monday, often it can be very slow. So we might just see this move around here for a little bit like this before it drops, if it's going to drop. We are getting indecision candles right now after this initial volatility spike that happened at 5 o'clock. So right now it's still not invalidated. The impulse is from the top, and so this is still looking more like a flag to continue down than anything else. To invalidate this, we'd want to see a move like that, and then if we got a flag there, you could take that, and that would be something to look into. If we get something like this, that would be quite a high probability, because it would be a head and shoulders pattern, and those work out fairly well for this pair. Probably more so on euro dollar, but it does work out. So that's what I'd be looking at for euro dollar. So either for a rejection here to move up, or if we get a I don't know, I wouldn't be taking an entry here just because it is Sunday. That's just me personally, but I do anticipate there's a possibility to get that sell and then the move up. So I just want to look quickly at Aussie Kiwi. It's not a pair that I'm trading all the time. Aussie and the Kiwi dollar are actually very, very close. They're almost pegged because the economies actually depend on each other. Kiwi very much depends on the Aussie, and they're very volatile. So you got to be careful. For instance, like this move here, you have to be very careful with trading this. But I did think it was very interesting. We have the broadening wedge pattern, and then we have the broadening wedge within the broadening wedge, which is a pattern within a pattern. We've talked about that in the course, how those just increase the probability. And we do, as I've mentioned many times, we do get that spike above and it catches people on the wrong side, and then the move happens that we're expecting. So if it fulfills the pattern, we get the 1, 2, you could say 4 touches, really. But if you had taken this one, it's fine because it did move down. It just came back up. So that would have been a profitable trade, most likely, depending on where your stop loss was. And then you'd re-enter on the 4th touch. So there's nothing wrong with that. And this is more a better entry because it's a double top break and a rejection. So that was a better entry anyways. But that was a nice pattern. We're seeing that sell off. And now the momentum's slowing down a little bit. But that's how Aussie Kiwi works. So it doesn't necessarily mean for this pair that it's going to stop, because it will often trickle down anyways. I just want to give you a little bit of a key lesson here for management, because I think this is a good one. So we have that evening star. It's not the clearest evening star formation, but it's a decent one, and this is a really high probability trade. So had you taken that trade, let's just look at this quickly here. So I would have taken it if I was going to take it. I didn't. Yeah, you'd want to take a 20 pip. So you take a 20 pip, and you'd be running 2.3%. Now it moves all the way up here. Now you'll notice in this impulse, there's no reason to be taking profit yet. So I would have this at break even as soon as we broke down. Most likely I would have it at break even. And we'd move back up, and you'd take this trade from 2.3% all the way up to almost nothing, almost break even. And that's hard psychologically to deal with. But if you had done that, then it turns into, now it's almost a 5% trade. Now granted, you wouldn't stay in for this move up. And I'm going to explain this in the new content that's coming out why. But you wouldn't for that. But the point is that sometimes for these bigger trades, you're going to get those breaks. It's going to move down impulsively, and then it's going to suddenly retrace. And you got to understand the market to know that, well, I want to kind of stay in. Now, if this had moved all the way down to here, then we'd want to take in some profit. And again, I'm going to explain this in the new content that's going to be released soon. Some management styles that'll help you out. But on these bigger moves, you want to give some breathing room. You don't want to choke the trades because even though this one most likely would have taken you out, let's say this wasn't as big, this turns out to be a 12% trade. Who knows? You don't. So you don't want to choke them out, end up with 1.7% on a trade, that would have been much bigger. Before I close this out, I just wanted to show you guys this because I think it's kind of interesting. And again, it just goes back to back testing and understanding how different pairs move and the nuances of certain pairs that gives you an edge in the market. And it really does add a lot of benefit. So these type of patterns I are finding beginning to work out more and more and more profoundly on Kiwi, CAD specifically, but other Kiwi pairs as well. So you get that impulse, and it turns into an ascending pattern, which we know is what it's going to sell off. We get that third touch, and we do get that sell. It moves back up, it double tops essentially, and then we get that larger sell. Okay, so not the clearest pattern in the world, but a decent pattern. If you had taken any one of those, the third or the fourth touch, it would have been a really good sell. I would say this pattern here is not quite as clear. You get the one. I would call this a second touch, but it is an arcing nature. So you do have your 3 points of confluence, and you get that rejection. It might not be as clear to you because you might be seeing this more as a flag to continue up, but I wouldn't because of that wick. And it is an ascending pattern. It is not a counter trend pattern, which is what you want for a flag. What ends up happening is this turns into a descending corrective pattern, and then it moves to the upside. And then the last one here I think is really good. It's on point third touch. You do have that overall arcing nature, and then you get that rejection candle. So that was a nice trade itself. So I'm finding that these impulsive movements, this suddenly turn into very corrective ascending patterns. You get that third, or sometimes even you'll get a fourth chance. are working out really, really well. So that's something to keep in mind. Now, it's not going to happen in every pattern, and you do want to keep in mind where you're at. And if you look at this, you'll notice that this is its own ascending pattern. It's not touching the outside each time, but it is an ascending pattern. So we are expecting those sells just because it's an ascending pattern. So who knows which of these could be the big move. So we're working with the expected consistency of patterns, so we're not working against them. So these trades would go with what we're expecting. So it's just something to keep in mind, something to look at. But again, you want to keep back testing so you understand how different pairs move, and it's going to help you a lot. So I'm going to close this out because most of the other pairs right now are very corrective. There are a few that might shape up this week, and if they do, I will try to do some updates in the Slack group for you guys. But a lot of things are very corrective, and they're waiting on the euro and the dollar to move, which are going to move together. So when those happen, we're going to see some really big moves. But you have to be patient because it's going to happen, I think, when people aren't really expecting it to happen. So be patient, put in the time and effort back testing, and those moves will happen and the percentage will follow. Congratulations to everyone who has posted their results or shared their results with me. Some of you are really killing it, and I'm really proud of you. It's really amazing to see those results. Some really beautiful trades, and really just proud of you guys for putting in the effort, back testing, and actually figuring out your trading strategy for yourself, how you want to trade this method, because it's going to be a little bit different for each and every one of us. Some of us prefer to take flags. Some of us prefer the rejections. Some of us prefer to be a little bit more aggressive and get in, more tight, and others are more conservative. There's no right or wrong as far as that goes. It's just setting up your style and adhering to it. The worst thing you can do is violate your own trading plan, because then you're just not going to know what's going to work. So I encourage you to stick with it and keep up the good work. And as always, thanks so much for watching, guys.